Hey everyone, hopefully you're having a good day. My name's Andy. My channel's Finding Value. Today we're going to go through Twitter, see what people are sharing on social media. I'm going to interject my financial opinions as we go, generally related to three different topics: wealth building, commodities, and or financial topics. So let's see what people are sharing, and I'll interject what I think is going on in the markets. You want to follow me at Finding_Finance, and if you want to join our community, finding-value.com. We have a Sunday, which is today, question and answer session going on at 5 p.m. Mountain Time. We do have a discount coupon code, Mayday, Mayday. If you'd like to join that question and answer session, we do have a training session at the beginning of that of how to use TradingView. So if you're interested in learning that, or if you're interested in knowing what I think looks really good at this moment based off of the technicals, I would probably join. So looking at this, and this is a leading, we'll call it a lead in to what I think looks good. It says uranium looking strong, URA, URNM, and URNJ breaking out A. So here's URNM. You can see we are starting to break through these all-time highs. We're starting to get some momentum here. A lot of the times what occurs is you get a big move up, you consolidate for a while, you break out of the consolidation, which is this group here, hit these all-time highs, we hit a little bit of resistance, came back and looped back around, and we're starting to break to the upside again here for URNM. We can also see this breaking out of URA, the Global X Uranium ETF. So we're starting to break to the upside there. Clear as day, and that's at all-time highs, basically, or 52-week highs, I should say. And then we've got URNJ also breaking out here, gaining some momentum. When you stack all of this evidence together, what I call that is confluence. It's the confluence of information that is agreeing with each other and stacking up to make an opinion. So we're starting to see a move in the uranium equities that look pretty dang good. Now, I'm just going to yank up. I've got CCJ pulled up here. This is Camco. Back out a little bit. Here we are making some 52-week highs and basically closing at that level. This is looking really strong for Camco, looking back in history here. Look at that move to the upside. Another way that we can gain more evidence on this is CCJ divided by the uranium price itself. And you can see we've been moving back and forth here in the middle. We can also take something like URNM and divide it by the uranium equities price. And what do you see here, guys? What do you see here? The three hump consolidation. We have a dead period. And then we've got a breakout of URNM starting to outperform the equities. That is huge. I mean, I don't know if people understand the gravity of what I am showing you here. Opportunities are stacking up in our favor here, and I call it the confluence of data here. Looks ridiculous for an extended move to the upside. Do not sleep on this, guys. You get it once, maybe twice, maybe three times if you're lucky in your life to play some of these gigantic big trend moves in sectors with this much potential. Another thing that we can look at, and more confluence, XAU divided by gold ratio is also breaking out here. So it's not just uranium, it's across the commodity board that is starting to do this. And I'll admit, guys, these are at such levels that are so low and are starting to break out that the movements from these bottoms that you guys are experiencing, I know people on the website, we purchased the bottom of this before it broke out on some of the companies. We've been accumulating these companies for 5-6 months at just wicked low prices. And I think people are getting confused. They're like, well, we're up, 100% in like a month. They're like, do I sell out? What do I do? And I can't give advice or anything like that, but what I'm doing is I'm holding on. We've got a long way to go. We have a long way to go, and we've got a lot of runway ahead of us in terms of ratios. So there's that. Here's URA divided by UX1, which is another one. And what do we see here, guys? We are breaking out. We are breaking out. This is the time that you better get what, in my opinion, you better look at the portfolio you have and you better be happy with the allocations that you've made because we are entering what I think is probably going to be an up leg cycle here for a lot of these different commodities. And I'm seeing this across the board. It's not just uranium, it's not just gold and silver mining equities. I think oil is going to participate. I think there's other sectors that are going to participate across the board. And this is a really big deal. You better have your SHIT together, in my opinion, because we could see things get a little ballistic here. Goose is what I'll call it. Looking really good. Coming on down, it says just in BlackRock CEO, what he says, and this is tied to power and energy. We estimate trillions of dollars of capital are needed to build AI data centers. The BlackRock CEO also states G7 countries do not have sufficient power supply to support artificial intelligence. Right now, we've got a lot of power being generated by natural gas, by uranium's about 10% for nuclear, and we've got some coal that's still in the mix. And then we've got renewables that sometimes work and sometimes don't. So the way that I view this is that we need to build a lot more energy in this world. And I think that is a theme that is easily investable around. And I think we are going to use every drop of fossil fuel that we've got on this planet. And then we're going to go and dip into a bunch of nuclear. And then we're going to take whatever else we can get from renewables, given the materials that are available that are there. Uranium will squeeze much higher, in my opinion. This person's long CCJ. URA on the move after President Biden signed law banning Russian. So we are getting some media time. I do think that we're probably in the beginning stages of the media attention phase for uranium. And this is also, in my opinion, so let's kind of walk through this real quick here. We've got Cameco, which is ripping. That is kind of a producer. We go and we look at some of the developers are really starting to heat up. I think the developers are going to start to run here pretty hard. And I've got very good exposure to the developers. But the explorers are still lagging behind. And I think as we go through this bull market, the explorers are going to start to hit it here. So I would be looking at some of the explorers in the uranium sector, probably at this time. And that's exactly what we'll do today during the question and answer session meeting. We're going to look at some of the explorers that look ready to go, and we'll do trading view. We'll learn how to do trading view and some of the tools that we can apply to some of these companies so you guys can see exactly what I see and what I think is coming. Uranium Investor says, my portfolio is now 96% uranium, 4% copper. What are your thoughts? I had some gold and silver, but sold to buy more uranium 2 weeks ago. Well, I'm not in the camp to put that much into any particular sector. What I would do is spread it across 7 or 8 very good undervalued sectors. I would take the best 3, 4, 5 companies from each sector and go into it. I'd even go more than that. I would maybe even put up to 5 to 10 companies in each sector, depending on what the sector is and the opportunities of those sectors. So I like to not be too overexposed to any individual sector. 96% uranium is probably too, um, it's too concentrated. I'm sorry. I would bring that down maybe to 30, 40, 50% to be as concentrated as one could get of original money put into it. I put a good 30% chunk into oil and gas in 2020, and now it's probably riding on the 50% chunk just because it's gone up so much compared to everything else. It really went up. And my oil and gas has definitely outperformed uranium. But we'll see going forward if uranium can catch up here. Nat gas is also another very volatile sector. So uranium and nat gas are kind of racing each other when you look at previous bull markets in terms of having the most leverage in a commodity bull market. It's generally precious metals like gold and silver and platinum. They have a lot of leverage. And then another very leveraged area is uranium and oil and nat gas. Those are kind of the big boys. And there's some other stuff, certain areas too, select areas that can also do some crazy things. Even the home builders can do some crazy things. Speaking of home builders, we've got housing completions are at their highest level since quarter 1 of 2007, boosted by building in the South and multifamily. So these are housing completions. And look at the completions going up for total. This is the total of all these combined. So they're going up pretty good. We're not near the top of 2005 or 7, and we still are drastically underbuilt in the nation. So I think that we're probably going to continue higher for a good long period of time. We'll probably hold here for a good chunk of time to try to catch back up. And obviously, this is going to be subjected to affordability too, as some people are able to afford it, and those homes will be sold. But if interest rates go down, if they do, and I don't know if they will, but if they do, I think it's gonna go up even higher. They're gonna build a lot more new homes. The affordability will be there then. Calvin says the big macro accounts are all trying to short metals on technicals. I have no opinion on short-term movements. I will buy all weakness. 10 years from now, virtually all metals will be worth far more than they are today, silver and platinum most of all. I agree. All metals, and remember, I think energy is going to go up in price in terms of fossil fuels. Um, so metals are just a derivative of energy. And if energy goes up and the ore grades go down, and you've got inflation in the system, and your system can't keep pace GDP wise with the money that's being created, all metals will go up in value. Copper, zinc, tin, everything. Silver, gold, platinum, all of it. But he is nuts on. I think he's right. Yeah. We've got my sense is that we're in the seventh inning of a cyclical bull market. He's talking about technology and stocks. And that the 66 to 68 analog is a possible guide for where we are in the soft landing recovery. In terms of the secular context, I think we're also in the seventh inning. He says, while other chartists may disagree with my approach, in my view, this secular bull market started in 2009, which he's completely right, when the deviation from the central trend was at its steepest. In that sense, we continue to closely track both the 1982 to 2000 and 49 to 68 supercycle. In terms of valuation on a price to total cash basis, we are tracking the 49 to 68 secular trend quite closely, which again brings us to the 1966 to 1968 soft landing analog. The CAPE model, cyclically adjusted PE, continues to project a moderation in 10-year annualized returns from the double digits of the past decade to mid-single digits going forward. This is using the 5-year cyclically adjusted price to free cash flow ratio. Basically, where valuations are at today isn't going to allow us to have these big returns like we did in a declining interest rate environment. It's not the end of the world following 15 years of robust returns, but it is in line with the maturing secular bull market. The clock is ticking, but for now, time appears to still on our side, both cyclically and secularly. And he thinks we're getting closer to the end of that bull market at some point here. So we're in the seventh inning, guys. I really do. I think he's probably nuts on, and I bet you we are somewhere in the late 60s, put it, which means we've got a big commodity bull market that's ahead of us here soon. Totally agree. The only way to kill inflation is if inflation becomes a whistleblower against Boeing. Sorry, guys. I thought that was funny as heck. Had to share it. Dude is one of the best investors I know, and we've been crazily aligned in our thinking for most of the past 5 years with almost no communication between us. So this guy, he's posting, says this chart plus the fact that gold is rapidly regaining its central bank reserve importance. There will be ups and downs, but my belief is that we are in a multi-year trend not to be missed. I plan to have 15 to 30% of my portfolio in higher quality gold, silver, and copper companies, which I agree with. I think that's a good mix. He says gold and gold miners as a percent of total global assets is only 1% in 2024. And these were previous market tops 28, 20, 30, and 26. And we're probably going to go from 1% to somewhere between any of these valuations here. We have a lot of money rotation to come into gold and gold miners space in terms of percent of total global assets. It's going to be crazy here, guys. Here's Aaron. He says, cancel your subscriptions to these newsletters and trading services. Just hold what you own. These junior miners are going to explode. Don't pay people good money to have to tell you to trade. They make no money otherwise. I agree with him. Now, I have a subscription service, but I agree with what he's stating, which is trading in and out. It's not the way to. One thing that I think I do provide in terms of value is what vehicles to play with the most amount of leverage and good entry points. Those are two things that will drastically increase your returns. It's what are some potential investments that I could potentially choose from? What are the options? And two, what are good entry points? And the entry point has really given me the big upside returns. My 5-year annualized return, annualized means that I return this every year for the past 5 years, is 41%. It's going 5 years back to 2019. That's pretty dang good. That is pretty dang good. And I'm hoping that I can hold somewhere in that range between 35 and 45%. That's kind of what I'm hoping. Now, it might be lumpy. I might have a down year or a year that's not that great, and then I have just an absolute stellar 2 years after that. That's your cycles as the waves come through. It says build the wall. This is Dick. He's got his thumb up. It says Dick moved out of a blue state to escape Democrat high taxes and failed policies. Dick moved to a red state, but still votes for Democrats who will raise taxes and implement failed policies. Says don't be a dick. Thought that was funny. We got a lot of people moving from blue states, specifically California, into Colorado and making this state a very blue state. Cuppy, except it mostly doesn't work that way. Look at 2022 when many funds were down because they all crowded into tech. Where is the hedge? Besides this is Project Zimbabwe, and markets won't go down much. You want to be levered long, but smart about it. Nothing worse than underperforming badly, given your LPs a pile of short-term capital gains taxes and then layering fees on top of it. In a decade with fat index returns, that sounds like massive capital destruction done at scale. They're talking about hedge funds and how these guys are barely beating the S&P 500. I think what's coming ahead of us is going to be very much different. And I think Cuppy's got that pretty much covered with Project Zimbabwe and the inflation aspect of it. Kobayashi says the US now has a record 17.7 trillion in household debt, a record 12.4 trillion in mortgages, a record 1.7 or 6 trillion in auto loans, record 1.6 trillion in student loans, and a near record 1.1 trillion in credit card debt. The total mortgage debt is more than double the 2006 peak, and total credit card debt is up 50% since 2020. In quarter one of 2024 alone, 9% of credit card balances and 8% of auto loans annualized transitioned into delinquency. Higher rates are taking their toll on consumers with record high debt balances. How much longer can consumers hold on? Well, I will say this, the design of the system is designed for more debt to be taken on continually. That is the design of the system. I thought this was a great quote here, guys. It says, copper, the most important metal. And Robert Friedland, I just think this is funny. He says, this is Robert Friedland from the founder and chairman of Ivanhoe. He says, you're going to need a telescope to see copper prices. That's awesome. Here's Stanley Druckenmiller. Copper's a pretty simple story. It takes about 12 years, greenfield, to produce copper. And you got EVs, the grid, data centers, and believe it or not, munitions, ammunitions. These missiles all got enough copper in them, and the world's getting hot, that we just think the supply-demand situation is incredible for the next 5 or 6 years. The BHP CEO, Mike Henry, says, the world will need 2 times more copper in the next 30 years. Here's Rio Tinto's CEO. So Rio Tinto sees strong growth in critical minerals demand growth through 2035, with China needing 4 million MTPA more copper. Freeport CEO, there's going to be a very significant shortage in copper. It's going to be very difficult to meet the aspirations that have been set. Here's Jeff Curry on copper. Copper's the best trade I've seen in my career. Prices need to go higher. This is the Lundin mining tycoon. Copper is a commodity of choice with a good future. An interesting thing about copper is that we don't have many greenfield projects. Canadian mining billionaire for Franco-Nevada, Pierre Lassonde, he says, lithium is the least critical metal. It's copper that's the most critical. Goldman Sachs, copper's the new oil. And JP Morgan, AI could drive huge demand for copper. The future looks bright. Copper, copper, copper is what I'm seeing. Median home sales price hits a new all-time high of $434,000 in the US. I know a lot of the housing bears like to use the median new home price, but that's just what sells more of. They haven't actually figured that out yet. But the median sales price continues to go to all-time highs. Lance says, Wall Street wants second mortgages expanded to unleash the next big U.S. stimulus. Is that wise? And they're talking about the housing market being stimulus for the economy and potentially doing larger second mortgages is what they're talking about here. This is URNM versus NDX. So the uranium miners versus technology wants to yet again attack the major ceiling here. We could see a massive breakout of URNM versus technology here soon. What does that mean? It means that the uranium sector is going to outperform the NASDAQ. And that's what we want. We want to be investments that outperform other sectors in the market. Calvin says, it's hard for some people to get this. Metals have had several hard moves higher over the last century. Oh, I already talked about that one last time. So we'll end it there, guys. Give me a thumb up for the content. Subscribe to the channel. We do have a Sunday question and answer session coming up at 5 p.m. today, Mountain Time. If you want to join the website or the community, it is May Day coupon code to give yourself a coupon and a little bit of a discount on both the monthly and yearly membership, depending on what you want to join. We are going to be going over a lot of good to great opportunities in the markets. We're going to chart these things out, and I'm going to show you how to do it in TradingView, and you guys are going to learn in TradingView how to do this. I'm a pretty basic guy, so I'm going to show you the basics of what I use. There are more advanced features that I know how to perform, And I can show you guys how to do Fibonacci, extensions, retracements, all sorts of that stuff. But I don't use those as much. But we'll go over it, and you guys can have a basic understanding of how to use it, what I look for in starting all this stuff in terms of charting long, big picture view charts. And then you get to see kind of how I figure this stuff all out. All right, guys, we'll catch you later. This is Finding Value.